Hi, I'm Pete Kiko, an auctioneer and realtor. I recently had a chance to sit down with Justin Haislip. He's a local State Farm insurance agent. And we had a discussion about first-time home buyers and understanding kind of what goes on behind the scenes regarding insurance valuations for new properties. This is what he had to say.
A lot of times whenever you're doing a quote, it is important for the insurance company to know how much are you paying for the house. So if the house is going to be, $150,000 is what you're paying for it, the mortgage company is going to have to make sure, the insurance company is going to have to make sure that I cover up to that $150,000. So it's kind of important because it has to be replacement cost for that piece. After gathering the quote, we put the quote together. At that point in time, kind of go over if there's any things or riders or different endorsements that you'd want on there, and then this is your rate. At that point in time, we can get that to your loan processor, and then they would be able to go through the process to see if that is okay, if that fits within the budget of your closing. I mean, if the loan or value, all those types of things are okay, then that works. So two things. One, whenever we come up with a value of your house, State Farm we're very fortunate, we're the largest homeowner insurer in the state of Ohio and actually in the United States. That being said, we were able to gather so much information on many of these houses we've already quoted at one point in time. So we've been able to keep that data in our system based upon that address, zip code clear down to the last 4 digits at the end of it. That's already compiled in what we refer to as a ERC, or estimated replacement cost tool. Okay. We already have that compiled. If we don't have that data, we're able to pull that from the auditor site in a lot of cases. In some cases, especially for new builds. So if it's a new build, then we kind of put that all together. What's the new address going to be, and then we would be the first one to put that in our database of, this is the replacement cost of this specific house. Something that's also very important whenever you go to buy a house. It's kind of almost shocking because in some cases you're going to buy a 1919 house and you may be paying $85,000 for this said house, but the actual rebuild or replacement cost of that house is $225,000. So it's kind of confusing because the market value of that house, so how much you're going to pay for it, is $85,000. But the actual replacement cost, so how much, if it, God forbid, were to be blown up, burnt down, just a hole in the ground, I need to put $225,000 in there to rebuild that. Right. Your insurance, or the mortgage side of things says, all right, as long as $85,000 is covered, you're good to go. Right. The stipulation also is that it has to be a replacement cost policy. So it's kind of, it gets a little frustrating in some cases to where, all right, I, as the insurance company, says it needs to be insured for $225,000 because that's replacement cost. The buyer is saying, all right, I'm only going to pay $85,000. Do I really have to insure it for this amount of money? And the answer is yes. And the reason is because it has to be replacement cost. According to the mortgage loan processors, it has to be a replacement cost policy. So kind of interesting. That's how we come up with a value, but that's one of those different pieces that kind of, it's kind of frustrating in some cases. Do I have to insure for this? Right. The answer is yes.
Yeah, absolutely. I mean, the goal of insurance is in case something catastrophic would happen, like you mentioned, you need to get them back in the house. And what's it going to,
correct.
And replacement cost is, in my understanding, is what's it going to cost to rebuild this house?
Correct.
Exactly right. So you paid $85,000 for it, but today's construction costs, the inflation of lumber, things like that, you have to build it again.
Correct.
Not necessarily. They could choose not to build it. Is that correct? Or we might get into the weeds here a little bit.
No, that's okay. The reality is that if, God forbid, there's a catastrophic loss with State Farm specifically, you do have the ability to rebuild that house right there of like kind and quality up to 100% replacement cost if that's what you insure it for. Right. So you have the choice to do that. If you say that you do not want to build that house on that exact lot, if you give me a vacant lot over here, I'll actually rebuild that house on that lot if you wanted to. So State Farm gives you that caveat. If it is a total loss, we would rebuild it in this space over here if you do not want it to be there. So it's kind of nice. It's not something that all insurance companies do, right, from what I understand, but we do through State Farm. We give you the ability to, if you want it here, yes. If you want it here, yes. But as long as it's of like kind and quality, we'll give you up to this amount of money. And I guess one more caveat is through State Farm's insurance policy, we're insuring it for 100%, but because we came up with the value, of what to replace it for, we're actually going to give you a 20% kicker above and beyond that, because God forbid we're wrong, and you sure as heck don't want me to be wrong. I'm actually going to give you an additional $20,000 or 20% to go towards, making sure that we get you back where you need to be. So that's kind of nice.